How to start investing in stocks for beginners. Are you a novice investor who is planning to get into the stocks? Stocks can become the best investment for you and give you a good amount of money in return. There is a great thing about stocks, that it grows your money over time. As we all know that doing just 9-to-5 jobs can never make you a rich person. Therefore, you should think about making an investment as soon as possible. But one thing you must keep in mind is that you first need knowledge about stocks, and you should do in-depth market research before getting started. Hello 101 community! Welcome back to our YouTube channel. In this video, we're going to explain to you how to invest in stocks and get a big chunk of money, especially if you are a beginner. This video is going to be very helpful. Make sure you watch from the start to the end. But before we begin, if you are new here, make sure to subscribe to my channel and turn on notifications to never miss any updates. What do you need to know to get started with stocks? When you are getting into stock markets, there are plenty of important things that you should know. First of all, you must know about yourself, whether you can take risks or not. Actually, the stock market is about taking a lot of risks, and there are a few strategies that you must keep in mind if you really want to be a successful investor. You should also know how you are going to trade stocks and how to open a brokerage account. Some investors want to get actively involved in this market, while some just want to buy and forget it. You can also take full or discounted service from brokers if you want to get the full service. It will also include the full range of traditional brokerage services, including market research and advice as well, but you will also have to pay the fee. There are some online investment applications that you can use like Webull, Acorns, Betterment, Fidelity, and many more. What are the best ways to learn how to invest and start trading? There are plenty of best ways to invest in stocks and how you can trade stocks. The first thing you must keep in mind is that you are not a jack of all trades. Actually, no one is, and therefore you should learn from others and keep learning because it is good for you no matter what. You can read books or follow a mentor. You can take online courses as well. If you do detailed market research before making any decision, you will not lose your money. In fact, you will grow it over time. You don't know that many investors have lost millions of dollars, and you can get their advice for free. There are also a couple of things like you have to research well which sectors you must invest in, and the history of the company in which you are going to invest your money, and try to avoid individual stocks if you are a novice investor. Also, try to avoid short-term trading. You can open a brokerage account either online or manually and start your journey. Also, you should be ready for a market downturn because this is the normal routine, but a lot of investors lose interest and make even worse decisions during these conditions. How do stocks work? A quick summary. If you want to get an idea about how the stocks work, actually the stock market helps companies in raising money in order to meet their expenses and finance their operations by selling shares to the public. It does not only help the companies to raise money, but it is also a successful source of income for investors because they can get a great return and growth. Mostly, these stocks are traded and exchanged in the stock market. A stock basically represents the ownership of the company. If you've bought any shares, it means that you own a slice of the company. Sometimes the price of the stocks goes up, and sometimes it goes down, due to various reasons. The major one is volatile economic conditions. You may also want to know about securities, which is a certificate or other financial instrument that has some value and that can be traded in the market. The securities can be categorized into two. One is mostly known as equity securities, like stocks, and the other is known as debt securities, like bonds. If you liked the video so far, press the like button and subscribe to the channel. Also, if you want to develop yourself financially and want to take your future into your own hands, check the links in the video description. Let's move on. What is the meaning of market crash? If you are getting into stock, you must know about the market crashes. This is actually a term that is very painful for so many investors. Actually, during a market crash, the price of the stock suddenly goes down and the investor loses interest due to the fear of losing investment. Most investors try to sell their stocks even at a lower price. A market crash can be a side effect of a major economic disaster. What makes this situation worse is the behavior of most investors. One simple and best thing you should keep in mind is that a market crash is not always a bad thing. It has a lot made many people millionaires or billionaires. How is that possible? Actually, when you buy low and sell high, you can make a huge profit, even in a market crash situation. What is the difference between a bear market and a bull market? If you are getting into stocks, you will hear two common terms. One is a bear market and the other is a bull market. Now, if you have a question in mind about bear markets versus bull markets, actually, these two terms show how the stock is going in general, or if they are appreciating or depreciating. Actually, the behavior of the investors has a strong impact on the market, so these two terms actually show you what and how the investor is thinking about the market. If we talk about the bull market, it actually represents a great situation of the market. In simple words, you can say that when the market is on the rise and the condition of the economy is going great, you can say that it's a bull market. So whenever you hear the term bull market, you should understand that the price of the stocks is going upward, and most investors generally think that this trend will go on for the long term. On the other hand, if we talk about a bear market, it is a condition where the prices or the value of the stocks are going down. In simple words, you can also say that the economy of the country is not performing well. If you heard the term bear market, you must understand the fact that prices or the value of the stocks are going down. But one thing you must keep in mind is that a market is never considered a bear market unless it has plunged 20% or more from its recent peak situation. Now an important question might pop up in your mind. A bull market is always great? Actually, you can also take benefits from a bear market. There is one simple rule. If you're trying to get into the stock market, you should purchase shares when the market is down, so you can get the shares at a low price. If you want to sell the shares, you should wait for bull markets so that the price of the stocks gets high. How do I know if a company is good for investment? Tips and strategies for choosing investment wisely. There is one strategy that you must adopt if you don't want to face a huge loss. That is portfolio diversification. I will give you an example here. For instance, if you put all your money in just technological companies' stocks, and after some time, due to any reason, the prices of the tech stocks go down and you will waste all your money. This would never be a great strategy. So, what you should do now is you must have a diversified portfolio, which means that you should buy some stocks of tech companies, some stocks of the pharmaceutical sector, and you should also invest your money in real estate as well. This will help in reducing the level of risks, and if the value of one sector goes down, you will have trust in the other sectors. Outro. Investing in stocks does not mean that you must invest all your earnings or salary into the stocks. If you do this, remember that you are going to make a major mistake. If you think that you cannot take a lot of risks, you can either start investing just 1% of your salary per month, and then you can increase the level of investment over time. If you buy and hold for a long time, you can make more profit as compared to holding it for a short term. This is the best tip for you. That's all for today's video. I hope that you enjoyed it. If you want to see more videos like this, subscribe to my channel and click on the bell icon so you don't miss any updates on the channel. Also, don't forget to check the links in the video description. And while you were here, click to watch one of these two videos appearing on your screen right now. Take care and stay tuned.